So historically, people have looked at restaurants as being very recession resistant. They're proportionally cheaper. People might trade down from fast casual or from full service dining towards some of these quick service restaurants like a McDonald's, like a Wendy's, like a Papa John's. This particular cycle, what we've seen is consumers are still spending about 10% more at restaurants than they did prior to the pandemic. Part of that is just that prices have increased 30% relative to 2019, and consumers haven't quite had time to adjust. Traffic in the United States at restaurants has actually declined for almost 30 months consecutively now. So it's an interesting and sort of mixed picture where you've got consumer traffic is migrating toward grocery stores, but nominal sales have held up pretty well. The broader consumption spending in the U.S. has held up pretty well, but it's shifted toward services, toward non-discretionary categories, starting to shift a little bit away from food. So that's sort of the mixed picture that we see. With McDonald's specifically, I think there's a little bit of concern with these other fast food stocks in that they're purportedly taking traffic and transaction share in the industry, and they only grew comparable store sales by 30 basis points in the most recent quarter. So as we move through Q3 earnings, it paints sort of a bleak picture of the results that I think investors are expecting from some of their competitors.
Indeed, and your fair value for McDonald's is $292, which is below the closing price yesterday. I don't know whether you're looking to revise the number, revise the target, but do you think that this is as good as it gets, a sluggish performance from a stock price perspective, really, for the business?
I think at this point, that's about as good as it gets. Yeah, we expect to move our $292 fair value estimate up by a low single-digit percentage, so that stock trades in a range that we'd consider fairly valued. In most places across the industry, we're looking at valuations that are 10 to 15% higher than our fair value estimates. Really, the only two notable exceptions are we quite like Papa John's, we quite like Restaurant Brands International, and we think that's tied to a couple of misunderstood risks regarding those businesses. For Papa John's with the CEO transition and value mismessaging over the past couple of quarters. For Restaurant Brands International, they've acquired their largest domestic franchisee. They're remodeling a lot of those stores and planning to refranchise those. So it creates a little bit of operational uncertainty that doesn't exist for some of those other operators. But by and large, the sector looks a little bit overvalued to us at this point.